Welcome to the show today. Today, we're going to be talking about how to be smart with your finances. Today, my guest is Mr. Joshua Jenson, aka JJ, the CPA. He has over 27 years of public accounting experience. He is the managing partner of Jenson Company, which he had founded over 23 years ago. He also has over 44,000 subscribers on YouTube with over 3 million views on his YouTube channel alone. He has published two books thus far, and his latest book is called Cracking the CPA Code. Let's welcome our good friend, new friend, aka JJ, the CPA. How you doing?
Well, I'm good. Thank you for having me on today. I'm honored, and thanks for the intro. I'm going to throw out there because it's happened so quickly. I'm up to 52,000
Wow.
subscribers on YouTube, 3.6 million views. But there's a lot of stuff going on in the stimulus world right now.
Oh, okay. So you believe that's kind of like affected, your social media platform because you're giving out this information to these a lot of small, medium-sized businesses out there?
Absolutely, and that's what I appreciate being a part of this with you. Is I think the attraction to myself and my channel is that I do carry the credentials as a CPA, but more that then brings the integrity in terms of the assumption of the information that's being provided. And I think that's been a big part. People are trying to find information, kind of what you're talking about here. And it's sometimes hard to find free information, if you will, from those that are maybe experienced. Let's just put it that way.
That is also true. Do you believe CPAs should give like some kind of free advice if it's just even 15 or 20 minutes just to ease the consumer or their clients or customers at ease?
Yeah, and the one thing about the CPA is that we are the second most trusted profession in the world, only behind the clergy. And so part of that, and I talk about it in my book, thank you for sharing that, Cracking the CPA Code, which is CPAs, I think, are very cautious about what information actually they are going to share because they can be held liable for that. And really the same with EAs, and that's enrolled agents, and tax professionals that have been doing it so long. And the reason for that is that the tax laws change so quickly. And we've seen that with the stimulus. And so I will tell you this, a good CPA, one that you probably want to hire, they probably don't have 15 minutes to give you,
Okay.
to be honest with you. And part of that, though, is not just the fact that they're trying not to be helpful, but they kind of understand the intricacies of what a basic tax picture can bring to the table.
That's interesting. So, having this wealth of knowledge in this industry, 27 years, what made you get interested into the accounting field?
Well, many people think, oh, you must be good at math. And you
Right. I
know
was going to
what?
ask you that.
Yeah, I mean, I'm okay at math, but honestly, I'm going to use a 10 key because I want to make sure it's right. And then we have software. But you know what? For me, believe it or not, it was following in the footsteps of my grandfather and Omar Abbott Slater, CPA,
Mhm.
hero of mine growing up. And I didn't know what a CPA was when I was growing up. What I knew was he drove that car, he had that beach house, he had a boat, he had that watch, he knew these people, and he got to play golf here. And even though I didn't grow up around him, as I indicated, I saw that he was helping people and that he was well liked, and that it was a profession, though, that carried a lot of respect. And so when I got into college and took my first accounting class, I
Mhm.
was really then immediately drawn to, well, what is a CPA? And talk with my grandfather. And so it may not be the standard answer, but I feel like there's a ton of job security. There's always going to be a need for a CPA. And in the financial world, in the business world, that CPA carries the same kind of credentials as if you were a doctor or an attorney. And so I think in some ways, kind of based on my background coming from very low income, not a great childhood, if I'll just volunteer that, I felt like I wanted those credentials. I felt like maybe I needed those credentials so that as I went into my career, I would basically gain that respect almost automatically, and sometimes not deserved. But nonetheless, that was really, honestly, it was the job security, good pay, wanted a lifestyle like my grandfather's. And then I really did want those credentials that went along with that. And that, that was 30 years ago. So it's not quite the same anymore in terms of there's enrolled agents that carry very similar type of respect, tax professionals. So I definitely don't want to indicate that
Yeah.
with my fellow peers that are in the tax world that somehow I'm better than them. It just the credentials do bring a different sense of trust and security and assumed knowledge, which sometimes can be a little dangerous.
That's awesome that you mentioned that, that we always need CPAs at some point. Do you believe other big brand software companies that have created this niche like the QuickBooks and things of that sort is kind of minimizing how useful and important the CPA is?
Actually, not at all. I've got a good friend of mine, Justin McAuliffe, CPA of CPA Enterprises, and he primarily does bookkeeping in his CPA firm for those that are across the nation. And he and I talk that he gains a lot of business because you know what? CPAs don't really want to do the bookkeeping. It's bean counting. What we would rather be involved with, and this is how I've designed my practice after 23 years, is the advising, being a consultant, having the time to ask questions of the client, come up with ideas. There does need to be a responsibility by the client to be also interested and involved. But I welcome it. Now, with that being said, with my clients, no matter who's doing it, whether it's a CPA internally or they have books with that artificial intelligence, I'm still going to look over those numbers, but at least a lot of that bean counting, as my grandfather would say, would be taken care of. So I welcome it, and take what's going on right now with PPP, the EIDL,
Yes.
the credits. There's so many other things that are going on that require our time with clients. So at the end of the day, I don't think it affects us as at all. I think it actually helps us get out of the trenches of bean counting.
Awesome. So you mentioned the PPP, triple P. So tell us, what is the PPP and its advantages?
So the Paycheck Protection Program 1.0 is closed, but they just now are rolling out, depending on when your listeners are tuning in, but they're just now at the beginning of 2021 rolling out round two of Paycheck Protection Program. It's solely based on payroll to employees. You're taking your annual payroll for 19 divided by 12 times 2.5. You do that same calculation for 2020. And in essence, that's 10 weeks of payroll, health insurance, and retirement benefits that if the recipient uses it for payroll, health insurance, and retirement, they do not have to pay it back. And under the new stimulus, there's no tax effect. They don't have to reduce down their tax deductions. So there is, in essence, it's literally free money that also yields a tax deduction. The key, though, with the round two is that any quarter in 2020 compared to the same quarter in 2019 would need to have at least a 25% decrease in gross receipts to qualify. So this is really meant to help the smaller businesses, because up to 300 employee businesses, help them maybe be stronger going into 2021. So I think it's been a godsend, if you will. And then they've got some other programs that are coming out related to that. But, with the PPP, you're able to now also take advantage of the employee retention credit, and the EIDL grant has no effect. So more just saying that out of the stimulus that happened right at the end of the year, all of these programs that they have are now cohabitating, if I could use that word, much more nicely, neatly. One doesn't adversely affect the other anymore. So if somebody qualifies for it and they are in some financial hardship, even projected down the road, I'm advising them to take advantage of this. They can always pay it back if they don't ultimately need it.
Oh, that's awesome. So there's a lot of myths and misconceptions out there about this particular program. Can you tell us what are like maybe two or three biggest misconceptions about the PPP loan forgiving program?
Yeah, so for whatever reason, there are those that think somehow This is the government getting involved in your business, and they're having say in your business. And the fact of the matter is, any grant that is given, state, local, federal, since the beginning of time, it always has strings attached to it. And the strings are, well, this money is meant for this. The other misconception is that employers only have to pay their employees if they're working. The intent of Paycheck Protection Program solely is whether your employees are working or not, whether you're opened or closed or not, the government is giving that business money to pay those employees. So there's definitely a big misconception there. Also, with the self-employed, they also qualify for the Paycheck Protection Program. There's confusion around that major related to the self-employed are not employees. They're not allowed to be employees. If you look at the simple instructions of Schedule C, it indicates that self-employed Schedule C filers, it's not possible for them to pay themselves wages, deduct wages. And so in the forgiveness, if you will, process, there's a big misconception with banks that the self-employed need to provide payroll documents on themselves, and they don't exist. So that would really be the big three right there.
Okay, wow, that's very important.
Yeah.
Uh, so I think a lot of small business owners are somewhat familiar with the Triple P, the PPP program, but are there any other programs out there, stimulus programs out there for small businesses?
You know, the one that people are overlooking is going to their city website, the city government website, their county government website, the state government website. And if they even just went to the homepage, these governments, local, county, state, each have been allocated money out of the CARES Act to then that city, that county, that state to determine where they think it would have the best impact. And those are typically not as available because there's not as much money there. So that one is massively overlooked. The second is the economic injury disaster loan. Now, it is a loan, you got to pay it back, but it's over 30 years, 3.75% interest. You can pay it back at any time. Here's what I tell those that are tuning into my YouTube channel is if you're having to make a decision about like, well, I don't know if I want an EIDL, how much should I borrow? Is 3.75%. And I say, you know what? Your house is not on fire. Do not get the EIDL loan. Because if somebody's house is on fire, they're not going to try and figure out, well, is this the right hose? Is it long enough? Can I use my neighbor's? Is this going to have enough water pressure? If their house is on fire, they're grabbing whatever it is that they can. So I tell people, if you're in those kind of circumstances, that's where an economic injury disaster loan would come into play. I'll tell you a misconception on that is people think that maybe it will become a forgivable loan. The economic injury disaster loan program through the SBA has been around a long time. So they're not going to forgive those because then they would have to forgive other loans for those that were a victim of tornado or hurricane or fire or earthquake. But those would be the big things. The one we need to stay tuned to is the second round of the EIDL grant, which is supposed to be really targeted to the low income areas of the country. And that is defined on the IRS website. But from that perspective, I bet there's going to be a number of individuals that are overlooking that. And then the last one, if I could throw it in, is there is a retroactive employee retention tax credit. In the CARES Act, you would either get to take advantage of that credit or PPP. The stimulus that came out at the end of the year, that act said, you know what? You can get both. So it's a retroactive tax credit. Let me tell you what it is for almost every employer. If you were closed and you paid employees, you're going to qualify for that credit 99% of the time. And the credit is this: whatever the employee got paid while that business was under a governmental shutdown, 50% of that, okay, is a tax credit that that employer is going to get back up to $5,000 tax credit per employee, which is incredible.
Man, that's awesome.
Yeah.
That's awesome. So there's so many different programs out there, so many stimulus programs out there. for entrepreneurs, small business owners, during this hardship, during this hard time. Um, are there any tips for entrepreneurs that you can give those small business owners or who are experiencing financial crisis during this pandemic?
Well, what I would say is, for small business owners, um, remember this, especially those that have employees. The survival of your business is you. Small business owners, the business is you. The business is not the location, it's not the logo, it's not the customers, it's not even really, and it sounds terrible to say, but it's not even really the employees. Even though we consider our employees a vital part, we can't do it without them. But the survival of the business is the survival of you. That means do not pull money out of retirement to make payroll, to pay rent. You lose your location, you lose your employees, you still didn't lose your business. So you don't want to get to the end of this pandemic and you've used up your resources to cover resources that really won't be there if you can't pay them. Meaning, employees, they're not able to stick around whether they love you or not if you can't pay them. The landlord's not going to let you stick around if you can't pay them. So if there's those that are a part of your business that won't be there, whether they love you or not, whether it's the most important person in your life or not, if they can't be there because you can't pay them, then don't use up resources to think that you need to survive your business. The other part is, don't get caught up in the ego of this. And the reason I say that is everybody is in the exact same position as any small business owner. There's a threat of revenue coming in, the threat of shutdown, the threat of regulations in terms of, stifling your business. You're not alone. So most small business owners, and I'm one, you know what we are? We're superheroes. We're bulletproof. Nothing's going to touch us. Everybody thinks we've got it all made, money in the bank. And guess what? We are, but every other business owner is just like you. And it's okay in these set of circumstances to go, you know what? Some of this is just not my fault. It's out of my hands. And if I could add one more thing, small business owners,
No.
take the relief that's provided. Most small business owners, they don't get into business expecting to get a special loan. They don't get into business to take out loans per se or to get anything from the government. Got to change your mindset, because if things are happening to your business that are out of your control and it's because of the government, and I just mean for safety reasons, then because of that oppression on your business, you need to release your mindset and allow your business to be taken care of so that it will survive.
That's awesome. So we talked about these misconceptions that that's been thrown out there all around. Um, so when a business owner, entrepreneur goes out and they want to file for a PPM, should they consult with a CPA first to see how that's going to affect their bottom line? What are some of the things they should do before filing?
Very little. They don't need to consult with a CPA or an attorney. They need to find a bank. Typically, the smaller banks, the local banks, are hungry, but there are national organizations that are also very easily able to get people signed up. What you want to do is gather up your, for PPP2, your gross receipts quarter by quarter. You don't necessarily have to have an accountant. It's what was your revenue January, February, March of 2020? What was it January, February, March of 19? If you think you need an accountant to do that, you need to wake up, because all you're doing is figuring out what your gross is. You're not trying to figure out tax deductions or how you classify stuff. And a business owner should know at least one thing. What was your gross income? If you don't know what your gross receipts are, you're in trouble before any of this pandemic happened. All you got to know is what your gross receipts are. So figure that out, compare them, as I had indicated earlier, how you qualify, the 25% or more reduction. And if you hit that, check this out. The PPP application for those that are going to borrow $150,000 or less, and remember, the amount is determined by your payroll. You take your annual payroll, health insurance, retirement for a year divided by 12 times 2.5. That's your loan amount. You don't get to pick it. That's your loan amount. You can always choose less. But my point is, you can figure that out. All you need is to look at your W-3. The W-3 is the annual summary of all your W-2s. You could even go just to box 5, count up your health insurance for each year. You do the calculation for 19, you do the calculation for 20, the same one. Whatever's higher, that's the amount. Now check this out. If it's 150,000 or less, you put a number on there, you sign it, you certify that you need it, and that your gross receipts are down, and you're going to get it. So, should you talk to your accountant? Well, sure. Do you want to talk to somebody about making sure your numbers are correct? Sure. But don't sit around and wait and think that you're going to get contacted, because accountants, CPAs, EAs, inundated as well. And then don't get in line trying to get information that you should already have. Now, do you want it to be as accurate as possible? Absolutely. So in terms of this, I would flip-flop it. This is what I tell small business owner. You start digging up that information. You start doing the calculations. Then you can take it to that person that is your advisor to say, will you take a look at this? Now, know this, the banks can help with that typically, hopefully. But don't wait. And then with the bottom line, here's the deal with the PPP now. If you use it as intended, which is for payroll, health insurance, rent, utilities, and interest, and a few new things with PPP2, a few minor things, you don't have to pay it back, and it has no tax adjustment. So if you got $50,000, you're going to be able to use that $50,000 on payroll, rent, utilities, interest, a few other things, and you get to still deduct that $50,000. So you actually come out ahead. The one thing I'm doing with my clients is that with those expenses, we are tagging them a little differently in a different category, so that we just know that the result of those funds came from PPP. And that's just internal purposes. That's just more, we don't want to include PPP in income because it's not. So the only other thing I'll mention is when you're pulling together your gross receipts for PPP round 2, remember, PPP is not income. Do not include it in your gross receipts. Your EIDL, your EIDL grant, anything else that you got loans on or you put money in, just because it's a deposit doesn't mean that that's income. It has to be income. And here's how I would tell an owner when they say, well, how do I know it's income? I say, you know it's income because it came from a customer or a client, right? That's what the income is. That's what your gross receipts are.
Okay. That that's very helpful knowing this information, especially because most small business owners don't have the time to really look at their books, and they always hire
Right,
somebody outside to do that.
right.
And hence is why they hire CPAs and bookkeepers. Um, Moving forward into 2021, do you predict or do you see any changes significantly or even minor in the tax laws that's coming up for small business owners?
Well, yes, I do see that there's a qualified business income deduction. I think that will get limited. That is a deduction where you take, in essence, 20% of your net business income, and that's a deduction out of thin air. Another way to look at it is under that provision, the qualified business income deduction, only 80% of your net income from your business would be taxable. Now, obviously, it's not quite that straightforward and simple, but you would want to remember this. Qualified business income deduction, is that on your tax return? I believe when you look at Form 1040, I believe it's line 13. You'll know it because it's bigger in Texas. It says qualified business income deduction. If you own a business and there's not a number on there, check with whoever's helping you with your return just to make sure something didn't get overlooked. I think, though, that's going to get limited. I think the rates will go up a little. I don't think it'll be substantial, but it will go up a little bit. I think there's going to be new capital gains rate. I don't think that it'll go automatically, but we know right now there's a capital gain rate of 0%, 15%, and 20%. I could see it being that there's maybe another amount above that. So if you have people with huge capital gains, they're going to pay a little bit more. I think we'll see a reduction in the estate tax lifetime exclusion. It's at 11, almost 12 million. I think that'll go back down to probably $5 million. I also think that, and I'll be happy for this. I also think that the limitation on the state and local taxes on the individual tax return, which right now you can only deduct up to $10,000 of sales tax, real estate tax, income taxes on your itemized deductions. That's a Schedule A on your individual tax return. It's limited now to $10,000 starting in 18. I think that'll go away, which will provide more deduction. So there'll be a little shakeout, I think, there. I do feel like, though, regardless of taxes, that the biggest impact we're going to see in 2021 is the availability of funds, the availability to borrow money. Money is going to become more scarce. The interest rates, even if not higher, there's going to be less to go around. Why? I think we're heading towards a banking / real estate crisis because the majority of that stimulus did not go to help the banks, in essence, or the landlords, if you will. And many were able to have a moratorium, which I'm glad for humanity's sake, to not have to pay rent, including potentially small businesses. But those landlords have bills to pay. They've got loans to pay as well. So my point is that I think we're going to see a crisis of unintentional but bankruptcies. We're going to see a lot of real estate having to change hands and not at the best values. And so there'll be opportunity, I think, for those that speculate in real estate. But I also think for my clients, what I'm telling them is we need to reevaluate your credit needs, ensure that you have enough now, that you've applied for enough now. Because here's the thing, we're going to have banks here in about 6 months that are going to be holding 1% loans, which is the PPP amounts that didn't get forgiven. And they've got to hold those 1% loans either 2 to 5 years. Loans, no matter what, we all know, use up reserves. So if you have a bank and their reserves are eaten up and it's only on a 1% loan, they're not making the margin, and that gives them less money to loan out. Also, if banks are having to eat loans or they're not getting the full payoff even in a foreclosure, well, they're now using up their reserves. The whole point is unintentionally, meaning the banks will be made out the bad guys potentially, unfortunately, but it will be necessary that they will be in a situation where their hands are going to be tied on just simply the availability of money to be loaned, even if the interest rate's cheap. So I'm a little bit surprised right now. It seems like the residential housing market is going through the roof. I know that from my clients that sell it. And so there's a lot of changing the hands of that. It's because of the interest rate. So I think we're getting a false sense of the lending programs. But behind the scenes, and I bet a lot of small businesses have already experienced this, credit limits are getting reduced without any warning. Credit card companies, your credit limit is now this. Some organizations, they're just saying you no longer have one. So the key into this is to evaluate who you're borrowing with and what are their availability, what was their involvement in PPP, what kind of loans do they have, will they be affected by this? But if you cannot borrow money, then businesses can't start for new ones. If you can't borrow money, you can't restart a business. And we may be down to a situation where those that are going to survive this year are going to be the ones that either have the amount of credit that they can rely on, or they've put themselves in a position not to rely on credit as much. And I think 2022, we're going to see a lot of small businesses have gone away. I think it's been predicted, 25% may not be in business by the end of this year.
Man, that I would hate to see that, and that would be
Yeah,
catastrophic.
tragic.
Yeah, that would definitely hurt the economy for sure.
Yeah.
And I can see why your YouTube channel have grown over time, because I felt like I literally just got a CPA crash course, and I have all this wealth of knowledge now that I can literally use.
Well, you're very
And,
kind.
and
Very
so
kind. Thank you.
so tell us, how did you grow your platform on YouTube? And because it's been impressive, and I mean, I just said 44, and now you're just telling us 52. And
Yeah.
how did it affect your career?
Well, the thing to know is that I've been JJ the CPA for about 15 years. I've been Joshua Jenson CPA for 27, but I just provide the kind of service that my grandfather did, which is personal. It's in the living room, it's at the boardroom, it's at the client type service. And it was at a meeting that I had saved a client about $1 million in taxes. Of course, they had a great year, and there was the availability of that to happen. And there was 4 partners in this law firm, and the one stood up and he started clapping and he said, JJ the CPA, because I had gone by JJ. So here's my point. I started branding JJ the CPA 15 years ago, and branding it in the sense of what does that stand for? What kind of service? And that was local. And then it grew into local TV. And then it really grew into a reputation that allowed me to grow my practice. And it was in May of 2018 that I started my YouTube channel, put out one video a day. And it was really meant for clients. And it was more to build a social media presence, because at that time I stopped taking on new clients. And the reason is I wanted to make sure I had the time to deal with my clients, which I'm thankful for. And most of the clients I'm dealing with me directly have been clients 15 to 20 years. So with that being said, in 2018, I started my YouTube channel, social media. I had a wonderful person helping me with that, but we did 3 posts a day on every single platform, a video every day. And when the pandemic hit, I think really though, I threw that all away. I didn't do any more posts on any other social media. I didn't do any fancy anything in my videos. If you look back in March and April, and I've kind of gone back to that. And here's what I'm saying. I was only then putting together videos for my clients. The information was coming out so quickly in March, and there was such a panic, and there was such urgency, and there was so much riding on getting PPP for starters, that I needed to, for the first time ever, communicate in a mass way, like masses, one message, one conversation. So I started to put together videos, and I stayed up all night, got very little sleep for about 3 weeks. And I put out video after video. And every time a client had a question, I figured others did, and I did a video. And here's why I'm telling you this. I was out in front unintentionally. I was putting together videos for my clients only. I didn't know anybody else would even be paying attention to them. And so I think they saw some authenticity. So I was able to be funny and yell and, talk to them like I was talking to a client. These are people I've known for a long time. And so I think what happened there is that people, I think, were drawn to it because I was providing information. I created a community service website, meaning people could go and get the worksheets I was creating all for free. Wasn't trying to profit off all of that. So for my career, I wanted to get to where I'm at back in May of 2018. Now, it happened in a completely different way. I just wanted to have a social media presence to be able to do seminars and speeches. That was really why. I wasn't trying to gain new clients. I wasn't really worried about having a big social media presence. But I think what it is persistence, authenticity, consistency, being yourself, even when somebody somehow criticizes it. And I think the biggest key there is, as Amanda says, who is behind a lot of this, be willing to suck at something new when you start out. Meaning, and this is what's held true. You go back and look at my videos in 18, 3 views, 5 views. I was excited if I had 32 views. I have a video that has 147,000 views. Here's the point. No one's paying attention when you're starting out. It's not that no one cares, just no one knows who you are. And to plug Amanda again, she wrote a book, Be a Potato, How to Be a Potato, but it talks about how to be persistent, because in the beginning, no one knows who you are, so it doesn't matter, but you've got to build up that consistency. So then by the time people are paying attention, you've been doing it for a while. You're good at it, or you've built up maybe more what you would want to better communicate. So the key there is consistency and authenticity. And as a CPA, back to what we talked about originally, I think also because I'm a certified public accountant, I also feel that when I'm putting any content out there, it has to be for the good of who's listening to it, value provided. And as I say in my videos, this video is for my client. If you're not my client, consider this. You get to listen in to the advice I'm giving to my client. And so I think that separates it as well. For my career, well, I'm now able to do seminars for a fee. I charge a very small nominal fee to attend my seminars, 3-hour seminar for $97, for instance. And then, of course, I'm monetized, and it's led to some of the things that I wanted in the book sales. But I already had my books written before any of this happened.
Oh, wow.
One I had published in the fall of 19 One I published during the pandemic, but had written most of it beforehand. So the other part of that is get ready for the success you're hoping to have. So I already had the logo and branded. I trademarked JJ the CPA, literally, and
That's awesome.
created then, in essence, well, what does JJ the CPA stand for? What's it look like? What's the tone? And you have to then be ready. So then when people started noticing, well, I already had the book. I have a song on iTunes called JJ the CPA, Money Never Sleeps.
I love
And
it.
it's kind of an old school, maybe Run DMC style song about JJ the CPA that I play at the beginning of my seminars. But I did all that in 19, not knowing that any of this would happen. So that I think part of the authenticity is when I started to grow, when my channel grew, this was already there. It wasn't, I did this because, and that I think allows the authenticity to be seen.
That's awesome. That's awesome. So you have the new book that you just written, JP, and then there's another book prior to that that you was talking about, just mentioned just earlier.
Yeah,
Is there
I
any
got
other?
cracking the CPA code, and this is how to do business with the CPA. And I don't mean how to hire a CPA. I'm talking about how do you get referrals from the CPA. So I dissect why the CPA does what they do, how they do it. And then the first book I wrote was JJ the CPA here. It's the top 60 questions of my clients over the last 27 years. And very little of it has to do with tax. It's insurance, banking, financials. And then this is literally my record, literally a record right
I
here.
love it.
You can put it and it will play on a record player, but it's on iTunes. I think it's 99 cents, called JJ the CPA, Money Never Sleeps. My son, who's 17, said, Dad, that song's pretty legit.
I'm gonna have to check it out after this interview just to see, and I'm definitely going to email you and let you know because I want to hear it now. I'm very
I
I'm
love it. I love it. Now, I helped put it together and write it, but it's Masterminds 2009 that put all the rapping and Bo, and he's the one that actually does the rapping in it.
Oh wow. So before we leave, any more plus that you have? Where can we find you? Where can the viewers go to any seminars, any projects that you got coming up?
Well, you're very kind to do that. On any social media, just do hashtag JJ the CPA, and every channel's called that everywhere. From Twitter, and the thing I would just ask is that when you're seeking out somebody like myself on social media, always know that when you're getting information, even from me that's a CPA, take it as gaining information to get ideas to then go and talk to your advisors. It's not always that you should take what you hear online, even from me, and then just go do it yourself. Sometimes you need to hire the plumber to actually fix, the garbage disposal, right? You might be able to watch it on social media. So I just say this, and humbly, when I'm providing advice, it's the best that I know based on my experience, based on my clients. So be mindful of that. And the key is this: get with an individual that you feel works in your industry. I talk about at the beginning of my first book, JJ the CPA, I talk about how do you find the right CPA, the right banker, the right financial advisor, and the right insurance professional. Typically, it's two questions. The first is, here's my circumstances. In 1 minute, you communicate that. What percentage of your clients fit my circumstances? And if at least 5% do, you found somebody that's probably a match. The second is, if you were to say, hey, what do we need to get started? Will you send me a checklist? And if they can get something to you within a couple days, that means that they are regularly taking on new business, which means they'll have room to fit you in. So you want to find someone that matches your needs by just explaining to them. So I say all that to say this, not to even really plug myself, but more to say, you're going to get good information, but take it to your advisors, because your advisors don't know everything. There's only so much they know. And if you come with them with ideas, a good advisor is not going to be threatened by that. A good advisor is going to take it and now shape it, mold it, and fit what those clients' needs are.
That's so true. That's so true, man. Thank you. I didn't have to pay the money and got all the resources I needed from from this podcast. But it's been a pleasure, wealth of knowledge from you, JJ the CPA. You know the hashtag JJ the CPA. Look them up. Legit. Join us next time on the Influence Blueprint.